Motilal Oswal Manufacturing Fund. Will investing in this fund help you in your wealth accumulation process in the long term or not? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to take the right financial and investment decisions to reach your financial goals in a more faster and smarter way. So first of all, before analyzing this fund, let us first understand what is Motilal Oswal Manufacturing Fund and learn about some basic details about this NFO. So as an NFO, it starts on 19 July 2024 and is open until 2nd August 2024. And some of its key features are it has belongs to the category of thematic equity scheme manufacture, and it is an open-ended fund type, and it has Nifty India Manufacturing TRI as its benchmark, and you just need 500 rupees as the minimum amount you need to start investing in this NFO. And the fund managers for this NFO are Mr. Ajay Khandalwal, Mr. Atul Mehra, Mr. Niket Shah, Mr. Santosh Singh, and Mr. Rakesh Shetty. The exit load for this fund is 1% if you redeem it within 3 months. Now let's take a look at the philosophy and the investment objective of this NFO. Say the main philosophy is they aim to invest from a diversified portfolio of equity and equity related instruments of companies which follows the manufacturing activity theme. So their investment objective is to provide investors like you with long-term capital appreciation from a diversified portfolio of equity and equity related instruments of companies which follows the manufacturing theme. So this is the investment objective and the philosophy they have as an NFO. To analyze whether investing in this fund will be worth it or not, let us understand what are the pros of investing and what are the cons of investing. So first of all, we will look at the advantages. So this fund is diversified among the top companies which follows the manufacturing activity theme in this economy between various sectors and stocks. Also, if you are an investor who's seeking for allocation to the manufacturing activity theme, then this fund option might be a suitable option for you. And also, if the new trends and emerging sectors like manufacturing theme performs and delivers well in the market, it will definitely boost the overall returns in your investment portfolio. So this NFO follows high risk and high return concept. Basically, the more risk you take in this NFO, potentially also get the higher returns. So potentially there's also potential for higher returns. So as it involves high risk, it might be suitable for an aggressive investor who's willing to take a lot of risk and who are bullish on the manufacturing theme. So these are some of the advantages which you can, if you feel like it aligns with you and your investment goals, you can consider giving this NFO a chance. So as we have taken a look at the pros, it's equally important to understand the cons of investing in this NFO as well, because the cons reveal the potential risk you might be undertaking by choosing to invest in this fund. So as this fund option involves a lot of risk, you might potentially, it might be riskier for short-term investor, because usually when you invest in equity and equity related fund options, it's best if you look for a long term investment instead of a short term investment, because in the short term period the market will be highly unpredictable, where it will go through highs and lows in a very unpredictable pattern. So it might go through a period of no returns or even negative returns. So if you are an investor who's looking to invest to achieve your short-term financial goals, it will be very riskier for you to invest in this fund. So it's better if you avoid investing in this fund. Also, this is an NFO and we do not have the proper track record to analyze how it performs in the highs and lows as of now. This fund might not be suitable to add to your core investment portfolio without all the complete details, because not all new trends and emerging sectors translate into stock market returns. Just because this theme is performing well right now, we do not know how it will perform in the later on. So we do not have the guarantee that this will translate into stock market returns for us. Also, as it has risk in it, you may overexpose your portfolio to negative triggers. So it might not be flexible and dynamic when you compare to a diversified funds. So this can also add more volatility to your portfolio. So you need to consider these factors, especially because this follows the manufacturing theme. It has high concentration risk, and especially if this new trend and emerging sector underperforms in the market, it will definitely impact the overall returns in your investment portfolio. So if you want to invest in a thematic fund like this, timing and the circle of competence should be on your side. You should need to know when to enter and exit from this fund to gain potential returns. Right. So these are some of the cons of investing in this fund, which you definitely need to carefully analyze before choosing to invest in this NFO. So, what is the final verdict? Should we invest in this fund or not? As we can see, this is not a beginner friendly fund option. It definitely needs a little bit of market knowledge to navigate investing in this fund. So, this is might not be suitable for a first time investor, even for a conservative investor who's not willing to take a lot of risk, because this fund has high risk in it. So if you are a first time investor or a conservative investor who's not willing to take a lot of risk, you should avoid investing in this fund. But if you still want to invest in a manufacturing thematic fund and you're willing to take a little bit more risk, there are other manufacturing thematic funds available in the market with a track record of at least 7 to 10 years. Why at least 7 to 10 years is because in 7 to 10 years the market cycle would have also gotten completed, and you will be able to track how it has performed in the high and low, and then take a calculated risk instead of taking a blind risk by investing in this NFO when there is no track record to analyze the risk we are taking. So it's better if you invest in other existing thematic funds, manufacturing thematic funds with a track record of 7 to 10 years. And also this will also be not be suitable to add to your core investment portfolio, because as I have already said, this is an NFO and we do not have the proper track record for it. So to add this to your core portfolio and later on if it performs not so well, then it will definitely impact the returns in your core investment portfolio, right? Because the main portfolio you use it to is to achieve your main financial goals. So it's better if you do not add these funds to your core investment portfolio and impact the returns there. Instead, what you can do is, if you still want to invest in this fund just to see how it will perform later on, you can start with a minimal investment. Like the minimum investment here required is 500 rupees, which you can start by investing in this fund with the surplus money you got. So you can invest it through your satellite portfolio for an experimental basis, but to invest in it to achieve your financial goals shall be avoided. And also, if you do not have the sufficient knowledge to know when to enter and exit from a manufacturing thematic fund, then you will not be able to gain any potential returns. Because when you know when to enter and exit right when the theme might be underperforming, it will help you at least gain potential returns, right? But if you do not have that kind of knowledge, it's better if you avoid doing that and better avoid investing in this fund itself. And if you still have doubts whether investing in this fund will be worth it or not, it basically boils down to what kind of investor you are. If you're a conservative investor or a risk tolerant investor, it all depends based on that. So if you need to know which fund option will be suitable for your investment planning or your financial journey, you can definitely consult with a certified financial planner to look for the suitability of this fund option or any other fund option with your investment portfolio, because they will look at your investment objective and what kind of risk profile you have and what is the overlap ratio between your investment portfolio and the portfolio you want to invest in, and what kind of allocation you need to give to each fund option to achieve your financial goals in the long run. So it's better if you involve a professional like a financial planner who will be able to smoothen this process and make it hassle free for you and will be helpful for you in the long run. So this going down this route might pave way for a better financial future, which you can also consider.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct a regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.